Hello, welcome to our program Análise Diária, where we make daily analysis of Bitcoin. This program is originally made in Portuguese and this is a special edition in English. We intend to release an English edition every Friday. So look up for that and thank you very much. Our analysis is made with our proprietary software, Wild Horses, and current market data. So let's dive in the charts. In this first chart we see here the closing price of Bitcoin quoted in Tether, the pair Bitcoin Tether negotiated in exchange Binance, represented by this black plot. The prices are framed in channels that, according to our software Wild Horses, best fit its behavior. At the bottom of the chart, we see a colorful line that depicts the volume traded in Binance, OKEx, and Huobi, represented as how many standard deviation they're above the average, and that gives us an idea of the strength of the move by the volume traded, so we can differentiate and trend from a distribution phase, for instance. So what we see here is that the volume in the last days have really converged to the average, and in our view that is a signature of a distribution phase where you are unlikely to see new tops and the risk of downside becomes greater than the possibility of a continuation in the move up. So we expect, yes, that the current phase will become a move down until perhaps the level of 3900, just above 3800 perhaps, and we don't see it likely going up because we are losing strength, meaning losing volume, and we are very near to the top here on $4,130 that was achieved in end of February. So we believe that so far the chances that we are going down are greater as far as the volume does not increase. So let's have an idea of our expectation for the end of next day. And what we see here is that our software is forecasting closing in $39.55. So that's a downtrend. Let me first tell a bit about how we do this forecast specifically, because we're using this in every analysis and I'm not going to explain this in every video, but it's important that most of the audience might be hearing this for the first time. So what we do, we take the last 450 days of trading, and that's the data set that we have available. So what we do is, for example, we choose a window size. In this case, the window size has 59 days. Now, why 59? That's a topic for another video, but yes, it has a reason. Every choice here was pondered and we found out what, in our view, was the best choice. So let's assume we start with the first 59 window. It starts in the first day and finishes in the 59th. We ask the algorithm, considering only those data, to determine, to forecast the 60th. We know this, how was this closing, but the algorithm is prevented to have access to this information, so it forecasts it for us. Then we show him the real value, we compute the error, and we shift the window. Now this window starts in the second day and finishes at the 60th. Then we ask the algorithm to forecast the 60th one. And once it does, we show it the value, the real value, we compute the error, and we shift once more the window. So how we choose this model here? Well, this model here was the one who, among all the possibilities, how many they are, 2,500 plus, that best behaved in forecasting the next day in the last 12 days of negotiation. Why don't we take the whole available set? Because not necessarily the information that is back down in the past has an impact what's gonna happen tomorrow. So it's our firm belief on that. It's not based out of nothing. It is based on more than 5 years of studying of Financial Times series, and we have reached after all this time a conclusion that what you're gonna eat tomorrow is not that much related to what you ate in a lunch 10 years ago. For that reason, we know that as back as you go in the past, the impact that that data will have in tomorrow's decreases. And we use this information determining the size of our window and how far we look back in time. So our expectation is $3,955, so, or tether better saying, in an admissible interval that goes from 3,930 to 3,980, so at best just below the 4,000. Now, why is that? I would like to point an interesting fact that our forecast for today, meaning Thursday, not Friday, because when I'm recording still Thursday, we forecasted a down move, whereas the previous close was an up move. It was the top of the move. So our algorithm was successful in forecasting a reverse in the trajectory, and now it forecasts its continuation. Will it be correct? Well, what we are having here, before I reply to this, I should comment the background of this plot. We can see that it starts with reddish tones and it converges to light oranges. Now, why is that? It's because that's the correlation between the price and the volume, and it says how far the volume is right now determining the move on average. Now what we are seeing here is a decrease in the color, so we're going down here in this scale. A correlation of 1 means that they are one the copy of the other, like they move together. A correlation of -1 means there are perfect opposites, like they move always in the contrary direction one of the other. And in the middle we have independence, like they have nothing in common. Okay, so once we are moving down here, it can mean both things, or that we are targeting the 0 or we are targeting the -1. I explain myself. A correlation of 1, which is reddish tones, means that they go up together or down together. And a correlation of -1 means that they go in reverse direction. For example, when the prices move down, the volume moves up. And that's precisely what we have seen in the last 2 days. The price was going down and the volume was moving up. Or the contrary, when the prices were going up, the volume was decreasing, and that pushes down the correlation between price and volume. But how much down? Well, we were here in reddish tones, now we are in orange tones. If it continue with this pattern, we will cross the green and reach the blue, like once we were in the early phase of when we were in the 6200. So that's the idea behind. What does that means right now for us? Well, by knowing what actually happened in the market, that means that if the prices keep falling, it's expected that the volume will keep rising, and that is important to signal for us a possible end of this move. If the price is going down and the volume is going down, it might mean that the market is getting away of this asset, so not interest on it. So of course this interpretation is subjective, but it helps to differentiate what might be going on with this asset. Now let's have a look at the plot itself. So we have here the chart for in Binance exchange of Bitcoin quoted in Tether, and what we see here is precisely that in the 1 hour time chart, that we had this strong down move and we have this very high spike here in volume, and we were preceded by hours of very low volume comparatively. And after this spike, the volume fell to original levels a bit below. That's not good. In our view, this means that this movement is not over. Let's have a look at the daily chart. And what we see here is that we were just here before the peak of the last move, just at the top of the congestion region that we enter since we made the bottom here in the 3200. Then we went up till the 400 4000 plus, and we couldn't break through. We moved down, made another attempt, moved down again, and then we broke it up, but very shortly, in a peak in $4,130, and then since then we are trying again to re-enter this region, specifically the 4,200. This region is a congestion region that is key for a breakthrough for upper moves. However, each time we enter it, we are unable to break it through and we are put down south. So that's what is happening now in our view. So although it is possible that it keeps moving up, we find it very unlikely, but we should look forward the limit of $4,130, which corresponds to the peak that we have here. We do not count intra-candle moves, only its ending. Why? Because our methodology applies the concept of sampling systems. So you measure it in periodical time intervals, and you get one information, in our case the current price. So we assign it to a candle which is its closing. So that's the only information we take into account. We do not take into account what happens between two closings or intra-candle. That's it. So looking down, if we keep moving south, we will look forward here to this limit of 3820, 3600 and 3400. So rounding up, it will be here here 37, 3400 and 32 here at the bottom. So 32, 34 and 37, these are the bottoms that we see possible for this movement. Up here, yes, in the 3840, 3830. So once more, if we keep moving down, 3840, 3700, 3400 and 3200, where we find quite possible that we make a bottom here in the 3840. It is possible also, but less, that we reach the 3700, and we start considering very unlikely here 3400, and ultimately unlikely the 3200. None of them are impossible, but we found it very unlikely that we lose the 3700 here. Very unlikely. So that's where we will look forward the moves of the price within this congestion region. And that's our view, that's our analysis for today. Thank you very much for your audience, and if you like this video, don't forget to sign up the channel and register for notifications, activate them so you get notice of future videos like this. If there was anything that we said that was not clear, please leave questions in the comments and we will reply you as soon as possible. So far is how we have behaved. And if there are any critics, any suggestions, we are open to hear them and we will apply them as far as possible and feasible for us. Thank you very much. Have a nice time. Have a nice dealings in the market, and we wish you the best. Till the next video. Bye bye.